Welcome back to the floor of the CME Group here in Chicago, Monday, May 16th. Let's get this party started the right way. I'm Killer from Treasury Curve. You know that we manage cash, so if you got cash, contact me. Either get me at the Killer or comment here on this video. But I think this week is really going to size up to be an important, indicative week of where this market is going. You know, we continue to look for clarity. And let's circle back 1 second to the SALT conference. Now, I talked about the SALT conference last week, which was just a tremendous opportunity to get some of the insights of the most brilliant academic people out there, as well as some of the most talented hedge fund managers. And no doubt about it, everyone is circling around looking at this June 30th drop date of this QE2. So the question is, the move in rates as of late. You know, folks, we're trying to get a feeling here and a barometer for where this market is going. But the move in the 10-year, we're currently at 319. Last Friday we tested that 315, 314 level again. But is that front running of QE3? If not, comment here, let me know. I know we've talked about this to exhaustion, but that is what the market is looking at continually. There's two sides there. You know, obviously earnings were spectacular this quarter. So every company is meaner, leaner, and they're moving on. But the flip side, you know, is the government going to intervene in some potential ways? So I understand there's two sides of the story. I'm respecting both sides of the argument. I'm just trying to figure out what's the trade and how do we get out in front of it, because clearly it feels like somebody knows something. You know, we had Bill Gross today talking about him being underweight, you know, the portfolio here, but he's doing a great job in his other part of his bond portfolio, but didn't really disclose where he is on those bonds. So I want to really get a pulse on this, because continually we're looking at the S&P kind of trading in this no man's land here. You know, currently at 1338, the killer pivot has been spectacular. You know, we tested it again today. I think that weekly pivot is coming in at 1340 and a quarter. So, you know, from a risk reward perspective, 1338, 1340, it's a good area to try and short. But once it gets above that weekly pivot, it should rotate right back to that 1353 level we've kind of gone over a few times. So I think as long as the 10-year, you know, let's key to the treasuries here this week. It's, you know, it's the last week of supply until the government realizes that, hey, we can issue more debt because the debt ceiling is going to be lifted. You know, and that policy, that continue to look to Washington, it gets a little scary, folks, when you continue to look to Washington for the market movement. But I think the 10-year, you know, we're seeing the weekly pivot come in at 122.12 and a half. You know, above 122.23, that's kind of the line in the sand there. Above that 23 level, all bets are off. Maybe we go down and test that 3% level. In the 30-year, that weekly pivot is coming in at 124.11, and that line in the sand, parallel to the 10-year, is 124.26. You know, we're looking at all the commodities here. Crude oil, you know, trading at 99. We have the euro currency back down here in the 141, 142 level. But I think crude oil, it possibly is going to dislocate itself, you know, from this S&P trade, which it kind of had in the last week or so. But it did test last Thursday. It made a run for that low. Stopped short at 95.25. So it feels like crude oil is going to try and gear back up, because obviously gas prices are not coming down as a continued strain on the consumer. So a lot of data this week. I think we're going to see some volatility here this week. So be nimble, be quick, and from the floor of the CME Group, remember one thing this week: be the hammer, not the nail.
Hey, bring it back, bring it back. Now double your money and make it stack. I'm on to the next